Welcome everybody to January 2026 Foreclosures Daily webinar. I'm your host, Nancy Wallace-Laabs, and I'm joined by
Kelcie Leka.
Kelcie Leka, who we happen to be a mother-daughter real estate investors, and we help women get out of the rat race. So first I'm going to talk about Foreclosures Daily before we get into the meat of the webinar. So foreclosuresdaily.com is your trusted nationwide real estate lead partner. So no matter where, if you're watching this from California, Ohio, Texas, Florida, they have leads for your state. Kansas, Nevada. So they have a nationwide reach, and they connect investors, realtors, attorneys, and first-time buyers with high-quality leads. They are an industry leader, and they've been in business since 2004. And we've become the internet's top destination for detailed, timely real estate information. And it's expertise that you can trust. I personally have been a customer of Foreclosures Daily since 2018. And one thing that I can share with you is that their leads, in the whole time that I've had leads from foreclosuresdaily.com, they always have real estate attached to the lead, which is so important. So there are other list companies out there, but they don't always have real estate attached to the leads. So, you don't always know what you're getting when you pay for those leads. So let's talk a little bit about how Foreclosures Daily is different. So it's a real estate focus, as I just said. The real estate lists that you get, or the names that you get, have real estate attached to them. And depending on the type of lead you can get them weekly, daily, monthly. So I specialize in pre-probate. Those leads come out every Wednesday. Every Wednesday, I have leads just, dropping into my portal, if you will. And the information that's included on the leads for it has the owner's name. It has, for pre-probate, it has date of death, but it also has the value of the property, which I find very valuable. So since I'm an investor, I look at investment properties. I don't do high-end properties. So properties that are like 500,000, a million, I actually partner with realtors to market to them, because normally, sometimes, not always, but sometimes those leads are more for listings for realtors, and that's not my business model. So they do specialize in real estate, and unlike other reports from other companies, they farm the list exclusively with real estate data. And they prioritize delivering up-to-date targeted information to keep you ahead of the game and ahead of your competitors, right? So what type of leads? Well, I already mentioned the pre-probate leads, but there's also probate. There's absentee owners, distressed property owners, eviction list, auctions, lis pendens, I always mess that up, pre-probate, divorce, code violations, inheritance, tax late, and they also have cash buyers. So if you need to build your list of buyers, like if you're trying to wholesale, then you can also get a list of cash buyers. Now the pricing, we used to have different things on here about the pricing and whatnot, but there's always a special going on, and they just missed the big year-end pricing. But unlike the competitors, it's based on what list that you're getting, so if you're getting the pre-probate or probate, and what county and how many and all of that. So it's bundled to and customized to what you are looking for in terms of marketing to these leads. So we have an example here. So Davidson County in Tennessee, their population is about 640,000. And compare that to Los Angeles County that has 9.7 million people there. So the volume of leads and how many you're going to get is going to be kind of dependent on the area that you want to focus in. So I go to some smaller counties in Texas, and so they might only have a population of 7,000. So they're not going to have tens of thousands, but the leads that they do have on there might be, maybe there's 20. Well, that's okay, because if I get 2 deals out of that 20, hey, I'm doing good. Your marketing dollars are vital. So you want to kind of work with your representative from Foreclosures Daily to kind of say, okay, this is how much money I have, how can I get the biggest bang for my buck? And the professionals at Foreclosures Daily will help you customize the list that'll be best for you. So you do want to reach out to your Foreclosures Daily representative and get your customized pricing package of leads and resources. Now, I say resources, so once you become a customer client of Foreclosures Daily, there's so much more because they don't want to just sell you leads. They want you to be successful, right? So they're going to give you resources or point you in the direction of where you can get more resources to help you build your marketing pipeline, if you will. So, for example, when I first started with them, they gave me like little scripts that I could use when I did my 6-step mailing campaign and phone scripts. And they have ways that you can work with different vendors to have professionally designed postcards or letters, depending on, what your style is. They have links for their customers for discounted mail rates. They will give you the 6-touch follow-up strategy. You can get pre-written email templates for attorneys, like if you want to work probate leads or whatnot. You get a copy of my book, Winning Deals and Heels, bestseller. And it talks about my story and how I got started in real estate investing. And also for skip tracing. So if you have, so when I do my marketing, I always like to show this. So here's a marketing, I do the note cards. And this came back. And the reason it came back was return to sender, refuse, unable to forward. That's from the post office. So now I can go into my special link from Foreclosures Daily and I can skip trace that owner to see if I can find a phone number and reach out to that seller. And then of course you get these monthly webinars, and there's also a special webinar that I recorded for foreclosuresdaily.com that has to do with how I market to pre-probates. So who are we? Well, I'm Nancy and Kelsey's on here, and we are a mother-daughter team. And I've been investing since 2006. Kelsey's a little bit newer to investing. She's just been investing for, I don't see, it's not quite 2 years, right, Kelsey?
Right.
And so she came from a marketing corporate background. And one of the things that she did is she transitioned out of her 9-to-5 job into real estate investing. So I'm a real estate broker here, so that gives me kind of an advantage so that I can run comps. I can figure out my own ARVs and that kind of thing. But I wasn't always a broker, so I've just had a lot of real estate investing experience. I think I said this, I don't know, it makes me feel old when I say the year, but I have been investing in single family homes since 2006. So, oh my gosh, that's like 20 years. I did start when I was very young. And I've been a client of Foreclosures Daily since 2018. So I'm very familiar with their leads. And, it's been great having a partnership with Foreclosures Daily. So what Kelsey and I are going to do, so in this particular webinar, Kelsey's still learning more about how to talk to sellers. So she's kind of listening to me. And so she might chime in on a couple things here. But for the most part, I'm going to be kind of presenting how I view talking with sellers, and I think you're going to be surprised by some of the things I have to say tonight. So what we want to really drive home, though, is that Foreclosures Daily gives you the leads, right? And now through these webinars, we're going to show you how to work them to find opportunities where you can be making money or purchasing properties, to get your real estate investing business really going. So again, this webinar is all about the art of the low offer and how to talk to sellers without sounding like you're lowballing. Okay, so why low offers fail? So if you're kind of new, and I did this, I think that's the cool thing about real estate investing. You can make so many mistakes before you actually buy a property that it's like learning as you go, right? So, a lot of us will just start out and we're like, oh, I don't know what I'm doing. I don't know if I got the ARV right. I just know that I'm going to stick to my guns and I'm going to try and buy properties 70% of ARV minus repairs. Now you might not even know what I'm talking about, but that's okay because we're not really going to go into that tonight. But basically there is a formula that investors use to buy properties at a discounted price. Now the cool thing about foreclosuresdaily.com is the leads that we're going to be talking about, you're going to be talking to distressed sellers. Low offers only work with people who are motivated. So if you're trying to work with somebody, let's say they have a $500,000 home, $500,000 homes are flying off the shelf. Theirs is completely tricked out, has all the, bells and whistles. And let's just say they show up on your pre-probate list. There's no amount of training, teaching I can tell you in this webinar about how to get that seller to sell to you with a low ball offer price. Because why? Because A, they don't need to, because their house is not, they're not in a distressed situation and they could sell it on the open market. So when we're going through this training, I want you to remember not every seller is in a distressed, urgent situation. So low offers only work when there's a couple of things in place, and that's what we're going to be talking about tonight. So most investors, newer investors, think lowball offers fail because the number is too low and the seller is unrealistic or the conversation wasn't handled right. And that's not why low offers fail. Low offers fail because the conversation was misaligned. And you're like, what? So I could call up somebody. Let's just take this guy here. He's looking at some paperwork, right? And let's say that his parents, I said that I deal with pre-probate leads. So these are people who passed away. The house has not gone into probate yet. And in Texas, you can buy and sell properties without going into probate. And the reason people would do that is because it saves them, thousands of dollars. And sometimes the family just wants to sell fast. They want to sell fast. They want to sell now. They don't want to wait. So as an investor, I can come in and my offer may be quite low, but if I'm a cash buyer or I have access to hard money funds that I can close in 14 days, that becomes very attractive. So if my seller is in alignment with, they're okay with the low offer because I'm meeting them where they're at today, if that makes sense. So I call it a misalignment when you don't read the room. I like to use that a lot. When I speak, I like to interact with the audience. And if I could see all of you, and if I could see that some of you are nodding off or whatever, then I want to change up what I'm saying because I don't want to lose you, because I might be imparting some information to help you get your next deal. So misaligning how you view what's going on with the seller and then how they're viewing, you as the investor coming in. So the investor that comes in and they're chasing the wrong leads. Okay. So I have clients that they want to do high-end short-term rentals. So they're not buying, $200,000 properties. They're buying, 400, 500, 600 and on up properties. And so there has to be a very unique situation for the seller to really want that property to have a very low offer. So we're going to use the term low offer. I don't really like lowballing because that sounds like, we might be taking advantage of the seller, when in fact we're aligning what they need with what we need. Okay, we need to get a deal at a discount, so that's how we make our money. We're buying it right. They need to have an investor who comes in who's going to close on the deal, who's going to, basically help them out of the solution. So chasing like 500 and, I'm just going to use 500,000 and up properties, and you're always trying to get lowball offers. Well, and you also have to know the market. So if, like in our market, $400,000-$500,000 houses are flying off the shelf. The days on market are, getting a little longer, but for the most part, those houses are, not sitting around. So if you're chasing the wrong leads, right? So what do I mean? Okay, the wrong leads are just retail buyers. Okay, that's the wrong lead. So you want to be talking to people who are the pre-probate, probate, divorce. There's an urgency, a sense of urgency to get the property done. One of my realtor friends, she actually is a court-appointed realtor that has to work with that gets appointed to families that are going through a divorce, and then she gets to list the property. It's very cool. And so sometimes she lists them and sometimes she can wholesale them. Or maybe it's the wrong time. So I have to be super careful on pre-probate leads because it's a balancing act. Because when I get the lead every Wednesday, that person could have passed away just 10 days ago. So if I send out a card or, call them, and 10 days have gone by, that's going to be the wrong time, right? Probate leads, sometimes you have to judge, where are they at in the probate process once they've filed, and same with divorce. Same with foreclosure. If the house is in Texas, the first Tuesday every month, there's a finite time I have to work with that person, right? And then without your clear strategy, so you as the investor have to know, well, what is your strategy? Is this a flip for you? Is this a buy and hold? So the offer simply exposes the problem faster. That's all you're doing. So what does a low offer really signal? Well, it's really not a negotiation tactic, okay? It's going to be an alignment of two things: the situation of where the seller is and the solution that you can provide, right? So, or the other one could be it's confusion about why the conversation is even happening. Like maybe the seller doesn't even understand, why you're giving them a low offer when, let's just take that $400,000 house, and they see all their neighbors selling for, 500,000, but their house needs $200,000 worth of work because it's a hoarder home. They've lived there for 20 some years. It's completely outdated. It has foundation, it has plumbing, you name it. It needs a new roof. So you might have to bring it around to the seller. So there's a time and place to talk about numbers, but the initial conversation is not usually that time. So the sellers react to clarity, not persuasion. So you have to be very clear about why you're coming in with the offer you're coming in at, and more importantly, how that solves that seller's problem. So why these leads require a different model. So we're specifically talking about pre-probate, divorce, foreclosure leads. They're not transactional. These are all kind of time crunches, if you will. They're all based on the need to sell the property. Now let me preface this. So pre-probate or probate, I'm not talking about properties where the family says, oh, I want to keep them. These are houses, properties that they want to actually sell the property, right? So they require emotional awareness. So if you've seen my training on the pre-probate leads, you have to have a sense of empathy because this person has, usually the person who's passed away, lived in the home. It's, a lot of times it's a husband, wife, mother, father kind of situation. And there's a lot of grief going on. So their emotional awareness. Divorce, when people get a divorce, sometimes it's, people are getting along. Most of the time they're not, right? So they have to sell the house to pay bills, and there's a lot of animosity and that kind of thing. So there might be a lot of anger. So there has to be some strategic restraint from the seller. So you kind of have to read the room. So when you start marketing to pre-probate, probate, foreclosures have a lot of angst because a lot of times if there's no solution that can be worked out, the person has to move out of their house. It goes to auction and, they're done. They got to get out. So they have a financial strain, they have to move, and there's just a lot of things going on. So these leads demand a different business model, not a different script. So the business model is how you are going to work with these leads. So I talk a lot about emotional timing, or the emotions that go along with these sellers. And then you have transactional timing. So transaction is when, the house is going to sell. That's more of in the listing side of it, where you can say, okay, the transactional timing is, this is when we can buy your house. So transactional timing, can this deal work right now? So you as the investor, you're ready to, make an offer, buy the property, start the renovations, flip it, keep it as a rental. You are ready to move today on the property, making that seller an offer. But the seller, their emotional timing is, maybe they're not even there yet. Is the person ready for this conversation? So when somebody calls me, when I do my marketing, and they'll call me, and the number one question I get asked first is, how did you get my name? That's what they always ask. How did you get my name? Well, I don't say, well, I bought a list from Foreclosures Daily and I thought I'd mail it to you. No. So I have to say to them, I have buyers who are looking for properties in your area. So I'm the first thing I want to find out is if they're even interested in selling, because there's no point in me having any further conversation. Say, you know what, I'm going to keep the house for a year, or yes, my dad passed away, we need to sell the house, but I have to wait till, whatever the situation is. So that one question helps me know how to frame the rest of the conversation with the person. So if I said, well, they said, yes, I want to sell the house. I'm like, oh, great. Well, I looked it up online, and, I can see that your house is worth $300,000. How long have you lived there? And then I could start asking a litany of questions, and I have to be perceptive if the person is if I'm reading the room right. And when you're on the phone, it's a little bit harder because I can't see their facial expression. Now, I used to go out, and meet with the person if they said they were interested in selling. I'd get some basic information and then I would go look at the house, right? But before I did that, I wanted to get an idea of when they were thinking about selling, because then that helps me frame how I want to solve their situation, right? Because they might need to find a place to move. They might need, a clean out. So I, as the investor, have to find out a little bit more information so I can ask the question to myself, can this deal work right now? But before I can honestly answer that, I have to collect information about the emotional timing of that distressed seller. So motivation does not usually, is not the urgency, right? Urgency creates pressure. So if they feel, it's like foreclosures, the people I've worked with foreclosures, there's an urgency there, right? And when people have urgency in their emotions, sometimes they don't make the best decisions. Sometimes emotionally they're just, they kind of freeze up because it's so overwhelming. So that creates pressure, and depending on how you handle it, they could see you coming at them as kind of hostile, right? So again, it's about reading the room, where if you can detect the motivation, okay, it reflects how ready they are. So foreclosures, probate, and pre-probate all have different urgent matters, right? So a probate lead is not going to be as urgent as, say, a probate lead. A pre-probate could be very urgent. I give this example of I work with funeral homes, and here in Texas, if somebody passes away and they're not able to pay for the funeral or the funeral home can hold the body, store it, but basically, and charge the family storage fees, right? So the urgency to get the house sold kind of becomes more urgent for that family. But with that particular scenario, there's also a lot of motivation around emotionality. So when investors try to manufacture it, you just erode the trust. So I know some scripts, I've seen them, especially with the foreclosures, where they'll say, hey, your house is going to they use fear on these folks that are about to lose their house. Pre-probate works the same kind of way. You have to be able to ask the right questions in an empathetic and understanding way. Because otherwise, what are they going to do? They're going to kick up their heels, they're going to get very defensive, and then the conversation just stalls. Because you're not going to be the only investor calling those. Especially on the foreclosures property, there's people door knocking, there's people leaving boxes at their house. So those folks are hounded, right? And so if you're able to get a conversation going with them, most successful investors that work with foreclosures go in with the attitude that they are solving that person's problem. They're still making money, but they're going at it with they're solving the problem. So the readiness determines whether a low offer lands cleanly. So I have had conversations with pre-probate people where they want to get rid of the house. They need to get back to their other life. They just want it gone, right? And so we have ways that we can work really fast. But again, that pace, if you will, comes from the seller. So I call the real art of the low offer. So when the art is not working, okay, it is, or wording, I guess that's, yeah. So confidence without force, restraint without hesitation, and listening without steering, right? So you are having open-ended conversations, open-ended questions with the people, right? So again, my first contact with the person, and again, I'll share this with you, my marketing message is very simple. It simply says, I send a card that says, I'm interested in the house at 123 Main Street. If you're interested in selling, please call me at, and then I have my phone number. So when they call, okay, I can't always assume that they want to sell, because I have had people call me up and they are mad, or they want to know how I got their name, but they're not, just because I said that in my marketing piece doesn't mean when I get the call that they always want to sell, right? So it's up to me to find out, well, does this person really want to sell? So if I get through the initial, how are you? Thanks for calling. Then I can start asking some more open-ended questions. Well, tell me about your situation. Tell me about the house. So I haven't said anything yet. I need for them to start trusting me, right? And if I just say, yeah, I'm an investor, I buy houses in your neighborhood, right there, that's very off-putting to a lot of people that are going through these financial distress, right? They just, especially if it happens to be around probate or pre-probate or divorce, because they have a lot of emotions going on that, you don't know what the story is right now, but we can make some assumptions that they are going to be very distraught about having to sell and move and that kind of thing. So common behaviors that I see investors time and time, and I did these too in the very beginning. I'm a yacker, right? I have a hard time sometimes just shutting up. So I've had to learn that over the years. Is like sometimes it's just better to be quiet. Remember there used to be a saying, I don't know exactly how it goes, but the person who talks first, lost the conversation or something like that. So talking too much, like trying to talk the person into selling the house to you is not going to work. Um, now the only time I do see that working is if I have worked with sellers where someone has referred me to that seller. They know that I work with distressed um, homeowners. So I already have that warm lead. The person that's referring, they already trust that person, and so they're trusting in me. So that's about the only way you can like go right in. And I'm not saying sometimes I have sellers that call me up and go, well, what are you going to offer me for the house? Okay, well, I'm still want to know, well, when are you going to move? Where are you going? Is the house vacant? Does the house need repairs? When's the last time it was upgraded? You still have to find out information. So talking too much. So I usually ask a couple questions and then I am just silent. And I just let that seller talk and talk and talk, especially on the divorce, probate, pre-probate, when people have a high level of emotion and they feel like they haven't been heard and they want to tell their story. Those leads are golden, and if you can have the patience and not interrupt them, and I mean, I've been on the phone with people for an hour, but that's okay because at the end of that hour, I'm going out, they're going to be working with me because why? I didn't rush them. I asked them strategic questions as we went along, but I let them do the talking and then justify instead of listening, right? So when I give my offer, and sometimes I will do it over the phone if I have enough information, then they might say, oh, that's too low. That's too, I couldn't do that. Well, okay, well, let's talk about that. What do you need? What do you think your house is worth? And then they're going to say, well, Sally sold her house, down the block, blah, blah, blah. Okay, great. Well, if you had to compare your kitchen to Sally's kitchen, are they the same? And as a realtor, and if I'm on my computer, actually be having these conversations and then explaining numbers too early. Remember, you're an investor, you are trained, you are learning how to run comps, you're learning about what ARV means, you're learning about buying properties at a discount. The typical seller doesn't have an understanding of our what I call jargon, right? They don't get what you're talking about. The average seller probably doesn't know that their house might need foundation repairs. And the average seller probably doesn't know that if their house does need foundation, then there's a good chance that their house is going to need plumbing repairs. And they have probably no idea of how much those repairs are going to cost. So the difference between you talking to numbers, explaining it too early, and you haven't prefaced it around what their cost would be and what you can get it for, right? So two different things. And then trying to convince instead of understand. When you're trying to convince someone it's in their best interest to sell you the property, there is a way to do that, but you need to make sure that you're coming at it as that you have an understanding of what their needs are, not what your needs are. So I say fewer the conversations, you have better outcomes. So high quality investors don't maximize the volume. So now we're talking about, are you just chasing leads, right? If you're just chasing leads and you're and there's models, there's people who do this where they make, hundreds of offers a day, hoping that one sticks, right? So if you have the volume in terms of time, money, and you want to run your business like that, you will be successful too. But that takes a lot of behind the scenes, making tons of offers and that kind of thing. It almost has to be automated. But investors like myself and Kelcie, what we do is we look for properties that fit our investing model, right? So I do single family homes. I don't do mobile homes, but some investors do mobile homes. Some investors do land. So I look at the type of investing I want to do. I also look at the timing. So since I've been working pre-probate leads all these years, I know that sometimes can take, months, a year. It can take, there's a long cycle with those leads. Now with divorce, sometimes there is and sometimes there's not, right? It just probably depends on where the couple is in their divorce. So everything has a process. Same with probate leads. It depends on where they're at in the process. And timing also has to do with your timing. So if I'm talking to 5 different investors in a week, chances of me buying all 5 properties in that month, maybe, maybe not. That's a lot for me, where I'm at in my business model, right? And then how does it all align with what the seller is trying to do and what you're trying to do? So the fewer conversations lead to cleaner negotiations, a stronger reputation, and better long-term outcomes. And I want to just talk a minute about that stronger reputation. So wholesalers don't have the best reputation, and if that's kind of what your business model is right now, then I see this in Facebook groups a lot, especially if they're coming from realtors. And I'm a realtor, so my job is I do train realtors about what wholesaling is and how it can work in their business and that kind of thing. But, if you're somebody who, let's just talk about that, you're just slinging the deals out there, you're just making offers, making offers, making offers, you're going to, but you don't close, right? You're just, oh, here comes so-and-so. You're going to get a reputation for just making consistent low offers that no one's even going to take you seriously, right? So you do kind of have to think about that as far as your business model goes. So I talk a lot about having compassion, and I guess it's because I do work with these pre-probate leads and, a lot of distressed sellers and that kind of thing. So I look at compassion as a competitive edge because not everybody knows how to be compassionate, right? We live in a very fast-paced world. We live in a world that has a lot of social media stuff, and, some of the stuff that we see out there is, good, sometimes it's bad, sometimes it's just, what are you talking about? I see posts and I'm like, is this even true? I don't even understand it. So I don't feel like compassion is softness. In fact, I feel like it is a great attribute, and that real estate investors that can deliver that time and time again have great deals. Because if you treat someone very well and you're compassionate and you're empathetic while they're going through one of the most stressful situations of their life, death, divorce, financial ruin, and you can help them through that with some dignity, they're going to remember that. Because if you think about it, everybody knows somebody that's going to pass away. And I think like 80% of the people that pass away have real estate. I forget what the number was. I did this statistic. It's high. We have an over 50% divorce rate. So if a couple's going through divorce and you're able to help them, through this situation, and, you're able to purchase the property, have a happy ending, so to speak, they're going to remember that because they know other divorced people. So there's sensitive situations. And if you can come across as someone who understands the situation, then you can drop people's defensiveness where they can listen to you. Because if they are defensive, they can't hear you. You might have the best offer, you might be the best investor, but if they have their hackles, if you like that word, hackles, up, they won't hear anything you say. So you have to come in with it with what kind of problem do they have and how can you solve it. So your trust, the more trust you can build, it's going to help accelerate their decision-making process, right? Because they feel like there's someone that they can rely on, that you're going to help them out of this sticky situation. And then that reputation, as I said, divorced people know other divorced people. Everybody at some point knows somebody that's going to pass away. So you can get referrals by helping these families that are going through these stressful situations. So the decision that most investors avoid. So are you just making offers to chase deals or to build an exit strategy that fits your life? Where are you? What are you doing, right? So as I mentioned earlier, when I get my leads from Foreclosures Daily, based on how they provide the leads to me, I can go in there and I can download them, I can put them in an Excel spreadsheet, and then I can target the area, the price range, the type of property that I want to invest in. So it gives me control. So most investors never stop long enough to define what they're trying to build, right? And where they're at and how much time they have. They stay busy, they stay reactive, they stay in motion, right? Especially when I hear new investors talk about getting into wholesaling. And real estate investing is a numbers game to a certain degree. Like, I will agree with you, it isn't a numbers game. Like, you have to market to so many people to get so many yeses. But along the way, you have to be able to incorporate getting deals. And the way you get deals is being able to talk to people. So it's really about, I'm kind of boiling it down, about building relationships, right? Building relationships with these distressed sellers. You have to have some motion, but you have to have strategy that goes behind it. So if I just mailed out all these cards, I had no strategy, like, okay, I'm going to spend my money on buying lists, and I pay a person to write out these handwritten cards I was talking about. I just throw them out in the mail, and then what? Okay, the phone rings, then what? So I already know my strategy. Now, granted, I've been doing it a while, and my strategy has changed over the years because I used to download the list and call them and all that kind of stuff, and I would do more volume. So now where I'm at is I can do, because I get more quality deals, I don't have to do as many deals, if that makes sense, or as many offers. Low offers expose whether you're operating from clarity or urgency, and whether your business serves your life or slowly consumes it. Meaning, are you just going out there and taking a bunch of names and just throwing them up and seeing what happens? So I'm very strategic in who I market to, what my message is when they call, and how I handle those calls. And that's what I'm saying to you as far as a business strategy. So first of all, almost every person I've ever talked to in my entire life, and that's a lot of years there, has an interest in real estate investing. You'll see all kinds of blogs about it. You'll see all kinds of Facebook posts and groups and things like that. There's a lot of people who want to know how to be a real estate investor because it's a proven way to build wealth. But you have to have a strategy, right? That meets you where you're at today. So for me, I have a different strategy than I did in 2006, right? Kelcie has a different strategy than I did when I started out because of her situation and where she's at right now. Um, Kelcie, I'm gonna bring you on for a second, okay?
Okay.
So when you started out,
Also, hey, really quick, just to pause, but can you move your head over a little bit? I guess it's blocking some of the words.
oh no,
Yeah, there you
here,
go.
do I need to go down? Is that better?
Hopefully it's better. But yeah. Okay, so go
Okay,
ahead.
so when you first started, of course, your story is that you've been on the fringes, since you were a kid, going out
Mm-hmm.
to fix and flips and everything. And so when it came time for you, we actually did house hacking because
Yeah.
you were, looking to buy your first house,
Yeah.
and that's what you did. So you just want
Yeah.
to talk a little bit about that?
Yeah, we purchased a single family 3-2. Definitely needed some TLC. But we spent, I don't know, maybe like 2 years in there and fixed it up and made some repairs, redid the kitchen, and then turned around and sold it and was able to buy another house with that. So that really worked for us just because, we were fresh into getting married and growing our family, and so it worked out with our lifestyle as well.
Yes. So now she's more of a passive investor,
Yes.
just because of where she's at in her lifestyle.
I
And with
couldn't I
the
couldn't manage two toddlers and doing some DIYs. So now it's all
Well,
about
and yeah, and so one of the things that we talk about is the roles in real estate investing, and one of them is management. And I'm not talking about property management. I'm just saying if you
yeah.
want to manage a flip or renovations on a buy and hold or a short-term rental, do you have the time and the people skills? So we talk a lot about those kinds of things.
Right.
So leads versus strategy. So lead generation without strategy creates constant activity without compounding results. It drains more than it delivers. It's disguised as burnout, as instead of productivity, and income that never stabilizes. So if you are someone who's like, maybe you're new to foreclosuresdaily.com and you're like, okay, well, how do I do this? What do I do? And so they have resources to help you, right? But you have to be actively involved in your real estate investing business. And I think that's what people don't understand is that either you have to have the time and money to be involved in it, or you have to hire it out, so you can hire virtual assistants. I mean, there's so many ways that you can be in real estate investing, but there's two things that everybody has to have. One, you have to have some money. You can't have like zero money. I mean, you have to have some money. And number two, you have to have some time, and you have to be, I guess there's three things, and consistency. Because let's just take the leads that I do. So I said I get them every week. So about once every 3 weeks, I'm doing a mailer. I'm just mailing out. I'm mailing out. I'm mailing out so that I have a funnel, right, of leads that are coming in. My strategy is working I choose just to work with pre-probates. I like them. I think I'm good at them. Foreclosures, I don't really like doing foreclosures, and this is why, because all new investors, it's low-hanging fruit, yes, but there's a lot of, it's too much angst for me, too much up and down. Is it going to close, not going to close, that kind of thing. So that's the lead. I decided what lead I was going to pursue. Now, I've tried all the leads. I've done divorce, I've done evictions, I've done, and I said, oh, well, pre-probate, I like this. This is the type of lead that I really want to work on. And that is my strategy. So I already know my why. The conversations I decline without guilt. When somebody tells me, when I used to just talk on the phone to everybody that would call me, right? Just getting all their life stories. But I learned very quickly that my time was super valuable. And I had to really weed out the people that wanted to sell their house, not that, or make a referral. So I had to build a referral business. I had to say, okay, you need A, B, and C. And then I let it go. I had to learn how to let go, right? And then the risks that I accept intentionally are just about the pre-probate. So I tend not to work with folks that are very difficult to work with. Like if you have a seller that's, they're just being unrealistic, you know, there's a lot of investors that will pay them the price that they want. And I let those folks go because even though I know I might have a better solution for them, I just can't beat a dead horse, right? If they're not going to, they have to have, after I've gone through and found out what their issue is and all of that, sometimes you just can't help people. And then what success actually looks like beyond volume. So I can get a lot of leads from foreclosuresdaily.com, and I do, but the thing is, not all those leads that I get meet my strategy, right? So, like they do all the counties in Texas. Well, I'm not going to market to like way West Texas because one, I'm not familiar with the area. And if I only wanted to buy property, this is where it comes into volume. So some investors, excuse me, some investors just get, thousands of names, they mail them out all over the state, and they just make offers, and it's high volume wholesaling is what that is. And that works, but that doesn't work for me because it would take too much of my time. So my strategy creates leverage, and without it, real estate investing just becomes another job. And I don't want a job. I want to be able to have the freedom to do what I want. I want to market to the people I want. And, marketing dollars are finite. Unless I want to spend my money on buying properties, not on, just, blowing it all on lists and marketing and that kind of thing. Now, if you're kind of confused about, well, where should we start, Nancy, or anything like that, Kelcie and I created, and I'm going to move my head over here. Kelcie and I created what we call the Millionaire Mama Masterclass because our company is, Millionaire Mamas, Money Makin Mamas. And this is actually, it's a very short, free webinar that we did. You can scan the QR code, but it's basically like how we invest in real estate. It's less than 15 minutes. but it's a framework for building income producing real estate without gambling your income, time, or family. We clarify the roles real estate should play in your life, and we identify different strategies that match time, risk tolerance, and goals. And we kind of point out, stop chasing activities and start building leverage intently. So, again, you want to build intentionally, not reactively. So, pre-probate, divorce, foreclosure leads are powerful, but only when they fit your life, your timeline, and your risk tolerance. And I just want to say one more thing about especially foreclosures. So if you're someone that does not have time to follow up on foreclosure leads and you went ahead and bought them, those leads take a lot of constant short term, lots and lots of touch points, making contact with them, staying in contact, more so than probably any of the leads that I've ever worked. So for me, they're very time consuming leads. They're very lucrative if you can get them closed, but they do take a lot of time. So if you're somebody that doesn't have a lot of time, you have a full-time job, you can't answer the phone during the daytime, you have no way to have these people connect with you, then that's not going to be a good lead list for you, right? So I just kind of I like to point these things out because sometimes people go, oh, well, I want to, wholesale, and I'm going to do the foreclosures. Same with evictions. Like one thing I do like about evictions is that it's landlords, so landlords get tired. So sometimes it's kind of a good, I will work with eviction lists, and I work with the landlord to find out, oh, well, are these landlords, maybe they're just tired of like evicting tenants or whatever. Now, during the COVID period, not so much, but now is a good time to look at the landlord, the eviction list. So, all righty. Well, Kelcie, I want to open it up for Q&A. Do we have some questions? And I
Yep.
left the scan thing up there for everybody.
Next time we'll work on the head adjustment. I guess it was blocking still a little bit, so we'll fix that for
Oh,
next.
okay, well, you know what? I could just, is it still blocking or is it, here, I'll just,
Well, now there's no words, so it's okay. But next time we'll adjust it. Okay, so hello, I'm also a realtor, but my approach is as a direct cash buyer first. But if a low offer doesn't work for the seller, then I can offer to list it for them. What are your thoughts on that?
I think that's perfect. I think you have to have options, right? So the next one that in March, when Kelcie and I do the next webinar, it's actually about monetizing every lead. So yeah, if you are, that's the advantage of being a realtor slash investor, because yeah, if they don't want your low offer, and sometimes you can get the property, get it under contract, or not get it under contract, but get it listed, and then it sits on the market, and then that almost strengthens your position, because as they get offers and they get these low ball offers, you can almost say, well, you know and then it almost makes the seller go, oh, okay, I guess I'm not going to get what I want, your offer was better. And so you as a cash buyer is really cool, because not only you can close fast, so that's also an advantage for that seller. So yeah, that's a perfect strategy.
I am a realtor slash investor. Is this class master class for me? And I am a man. Is it open for me?
Yes, it is. We do work with men, all right? So don't be offended. We say millionaire, everybody's got to have a shtick, right? So ours, just because we're moms and I'm
Mhm.
her mom, and we make money, and millionaires and all of that. So no, but it's real estate investing is for everyone. We just happen to kind of focus more on women, but yeah, we're happy to have you with us too.
And also realtor investor. Yes, it is. It's for the
Yes.
master
Oh yeah,
class
yeah,
is for
yeah, yeah.
everyone. Okay. Any other questions? Oh, okay. Do you do any cold calling or do you just do mailers only?
So good question. So in the early days, I would download the list. I had a dialer, and yes, I did a lot of cold calling. Um, I do cold calling occasionally. So I don't do as much as I used to. Um, I just have more time to send out mailers, and the way we segment our list, we get a lot of calls back from our mailers. So I really haven't even had to, but yes, I have done it. And some people swear by it. Some people swear by cold calling. For me, I do a lot of public speaking, and so sometimes my time is not as open to cold calling. So, because the best time to cold call is in the morning, like from 9 to 11, and then during people's dinner hour. And I used to run call centers back in the day. And so I've had enough of my share of people telling me where to go, so to speak. So I don't do cold calling as much, but I do know investors that do, and it's lucrative for them. And I'll tell you the ones that I have a better time cold calling are landlords. So if you get the eviction and you could call the landlords because they're more business people. So sometimes I would not advocate for calling pre-probate people just because of the recentness of the death of the person.
How do you determine which leads to work, 70% or 80% of ARV?
Good question. So it depends on my strategy. So if I'm doing a buy and hold or a short-term rental in a very lucrative area, I have been known to pay up to 80% is about my threshold. I tell you what I really, really look at is property taxes and insurance. And I'm not, I am concerned with cash flow, but not as much as appreciation. So if I find a property and it's really difficult right now for the 70% of ARV. I mean, just because of the area that we live in. So, but in the secondary markets, like so we go about 90 miles outside of the DFW area, and in Fort Worth, you can still find great deals over there. And my ARV is usually 250 to 300,000. So I'm looking at buying properties between somewhere between 150 and maybe 175. And I'm part of several wholesaler lists. And there's been some properties coming across that are all under 200,000, and the ARV is about 350, 400. So I think people are feeling like they need to sell their house.
Um, Gregory, interested in probate and divorce. Do you guys do mentoring? I'm trying to focus on investment properties for the next 5 years. Fix and flip and hold. I like to walk away from real estate resale.
So yes, we do mentoring. Just reach out to me. You can either find us on Instagram or when you sign up for this. If you sign up for the master class, you have to put in your name and email address, and then in one of the emails, just contact me, and we'll be happy to schedule a call with you.
Yeah. Who do you use for mailers? Any referrals?
Uh, So I use the good old United States Post Office. Now I have used Marketing by Hand as one of the companies with Foreclosures Daily. There's a couple other mail houses, but generally because of the way I do this, I don't know if you guys can see this card. I get these note cards off of Amazon, and then recently Kelcie and I we tested a postcard. So we do postcards too. I don't know if you can see it if it's going. There we go. We do a postcard and
Cool.
we print the labels. I have a mom that lives in our neighborhood and she does all the mechanics of putting everything together, putting the stamps on, and we drop them in the mailbox. But we do our own mailing.
And I will say it's a little, because after bedtime, it's a little digress mind of just stuffing mailers and putting stamps on.
Yeah, it's like a family affair.
Yeah.
We're trying to
Um,
teach my 4-year-old grandson how to put the stamp on the envelope, so he's not
yeah.
quite there yet.
Who do you use to skip trace your probate leads?
So interestingly, I use a couple ones. So I use a company called Forewarn, but I've also used TLO. Now TLO, you have to be, they have a little bit more stringent requirements. And then through my realtor association, I have Forewarn.
And then as of right now, that's all of our questions, but we have a couple more minutes if anybody else wants to have anything
Yeah,
to
and I'm
add.
going to go ahead and kind of start closing out here. So I wanted to just tell, okay, I'm just going to, I don't know why my head is, I guess this, every month we try something new. But anyway, and then I got this share button. I'm thinking that's doing it too. Okay, so first of all, we want to thank everybody. There were so many people that signed up for this webinar, and I know you will be watching it on the replay because usually what happens is we have a lot of people sign up and then we know the replay gets watched. So number one, thank you for watching and giving us your time tonight. Do reach out to your foreclosuresdaily.com representative, and there's the phone number, or visit their website. Get in touch. You can email me at nancy@foreclosuresdaily.com. And I will be back on February 3rd, and you guys are in for a treat. If you've never heard Al Nicoletti, he's going to be the guest speaker. I'll be the, I guess, the MC that night, and he's going to be talking about crushing probate. He's a an attorney in Florida that handles probate, and it's very he's a great speaker. It's got a lot of good stories. And then Kelcie and I will be back on March 17th, and oh my gosh, I think that's St. Patty's Day. Is that not right, Kelcie?
Oh, I don't know. I'd have to look at them, but around
March.
there, yeah,
Yeah, so we will be, I can't promise it, but maybe we'll have a green beer. We'll try to remember to wear a
oh,
green
it
shirt
is.
that night.
It is.
And that
Um,
webinar is going to be about monetizing the leads. So when you get the leads from Foreclosure Daily, and I talked about, what my buy box is, and then how I like if I get a call from somebody and their house isn't going to work, well, you know what? I want to monetize that lead any way I can. So that's what we're going to be talking about. So again, thanks again, everybody, for showing up, and have a great week. If you're in an area that's getting some snow or rain, be safe out there. And we will see you all next month.
Thank
Thanks,
you.
Kelcie. All right. Talk to you guys later. Bye bye.